mention that there was clarity from the board on reaffirming the goals of alleviating poverty, that being a primary goal, and of boosting shared prosperity. That's at the core of the work, and then it's done in a context. Progress toward those goals requires a stronger focus on sustainability, resilience, and inclusiveness. So those are now being implemented through the operations policies of the bank. Also, in this evolution process, we stated our commitment to enhance our operational model to strengthen our service to all clients. This involves middle-income countries as well as low-income countries. And there was also a convergence on ways to boost the financial capacity of IBRD, the International Bank for Reconstruction and Development, by lowering the equity to loan ratio to 19%. There's a hybrid capital pilot for capital market investors, and there's a scaled-up bilateral guarantee program. All of this combined can give as much as $50 billion of new financing by IBRD over the next 10 years. I do want to mention yesterday was a busy day here at the World Bank IMF spring meetings. I participated in and often co-chaired meetings on the MDB evolution, on the global roundtable on debt, where we looked seriously at ways to reduce debt. And let me mention several things that came out of that. One is the importance of timeliness in the process, that the investors really need some kind of confidence in how the process will proceed. There needs to be early information sharing, and IMF and World Bank will be sharing the debt sustainability analysis earlier in the process, and we're working on a note for the rules on that. There was a call for disclosure of contracts. Transparency is very important within this process. Also, discussion and agreement that there needed to be equal burden sharing among creditors as part of the restructuring process, and there'll be a workshop on that will start in May to discuss the techniques of that. Also, yesterday, in addition to debt and MDBs, there was the Ukraine discussions as the war there continues. There was the G20 meetings that went into the evening last night. G7 meetings, and also very importantly, the Development Committee of the World Bank. That's our governors, and there was strong endorsement of World Bank leadership and of the evolution process that's underway for the World Bank. So as we think big picture about what's going on, it's this slower world growth where the problems are magnified into developing countries. The World Bank is working on all of these problems, but the reality of the world is there's not enough resources and the problems are actually growing. And so as we think about the World Bank into the future, working harder, more efficiently, better and stronger on the impactful projects around the world is all part of the goal of management. Thank you.
Thank you. I'll take your questions now. If we can have a little more light in the room, it's rather dark for a press conference.
I can't see you.
But I can see front row Xinhua here. If we could get them, wait for the microphone, please. And if we could have a little more light, that'd be super. Thank you.
Now we can
good.
see. Hello, everyone.
Thank you, David, for taking my question. So you have recently warned of global economic slowdown this year, with China and India are two notable exceptions. So would you please elaborate more on the momentum of the Chinese economy and what an improved Chinese outlook mean to the world, a fragile global economic landscape? Thank you.
Thank you. I was in China in December as the lockdown was lifted, and so what we're seeing in China is a rebound from lockdown. That means 2023 growth may reach 5.1% after a 3% kind of growth in 2022. And so that's a pickup. It adds to global growth. and it also reflects China's efforts and explicit efforts to have a faster opening process for China and to have the supply chains begin to come back together as they feed into global supplies. I think this is also in the context of the global supply chains readjusting after the considerations over the COVID years. There had grown to be a strong dependence on China, and so the world is working to diversify supply chains as well. So in that context, China's growth is additive in a year like 2023 where that's needed. It has, but it also leaves open the challenge for the world of how do you get the most efficient production in a diversified way going around the world. Thank you.
Thank you. Great. I see Shabtai Gold here in the red tie, please. If we can get the mic to him, please. Thank you.
Thank you very much. Good morning. I just wanted to ask regarding the debt roundtable that took place yesterday. How much progress was really made, and where is the situation relative to where you wanted to be at this point in time on debt relief and restructuring for low-income countries? Thank you.
Thanks. Restructurings mean you actually get to a change in the debt contract so that there's more sustainability for the country. That can be done by changing the interest rate on a loan or by extending the maturity. It can be done by lowering the principal amount of the loan. So those are the ultimate goal for the countries. The common framework, the G20's common framework process sought to get that started, but World Bank and IMF have looked for ways to improve the G20 process so it would be more timely, actually move the process along, and actually reach a result in terms of debt sustainability for the countries. So there's still a lot of work to be done, and the details matter. We're talking about Zambia, who has been present at the meetings and they've been working for 2 years with the world community in order to restructure their debts. It's in the context of a very successful economic program in Zambia. They've done more than most any other country in terms of having fiscal discipline, having growth-oriented policies that make it possible to strengthen the economy, but they still haven't been offered the text of a debt restructuring that would reduce the debt burden. And so we're hoping that there will be a memorandum of understanding, an MOU, which is the goal of this process, that could come out this week or next week. China would need to go along with it, and that's an important part of this. The private sector creditors are critical and have to be deeply engaged. We discussed yesterday the World Bank is providing implicit debt relief through the IDA process. You know, IDA is the fund for the poorer countries, and it constantly is giving substantial relief, often through outright grants. For example, in Zambia, we will be starting on July 1. All of our assistance to Zambia will be in grants. And so then it's incumbent on the other creditors, and particularly on China, to come forward with actual debt relief that will allow the country to become sustainable. I can go through each country, but it's specifics. In Ghana, we are looking for the creditors committee to form. In Ethiopia, for there to be structural reforms that can get to the IMF program, and that leads directly into the exchange rate system. They're using a dual exchange rate system in which the funding of the official exchange rate for a narrow group of people is very expensive. And so to move away from that so that there can be stronger growth within Ethiopia. My view is if they improved the exchange rate system, capital would come back to Ethiopia. Right now, the exporters keep their funds outside Ethiopia, and so if they unified the exchange rate, which is under discussion within their economic program, then there would be a flood of investment back to Ethiopia, and that would improve substantially a desperate situation that's going on in East Africa. East Africa is facing famine, it's facing very, very hard climatic conditions, and this shortage of fertilizer that's going on around the world because of the high price of and lack of availability of natural gas. So these are all challenges within the debt framework. Thanks.
Thank you. Let's go to Al-Ahram here in green, please. Thank you.
Thank you, David. My name is Abdulmanam Ahram, online from Egypt. I have two questions, will be focused on Egypt. My first one is, the World Bank expected Egypt's debt to jump significantly in 2023 and beyond. How do you see that, and what are the key drivers behind this forecast? My second question is, how do you see the recent developments in Egypt in terms of private sector support related procedures, and in first place, how the World Bank is supporting Egypt amid these ongoing challenging time? Thank you.
Thank you. I was just looking up our forecast for Egypt. In 2022, it shows 6.6% real growth, and we're looking for 4% in 2023. But I should note on that, in countries with currency devaluations occurring and inflation high, it's hard to really track real growth, because as inflation goes up, the burden is on the poor because they can't keep up with the rising prices. So it creates very real challenges. We've worked closely with Egypt over the years, and the IMF has, in developing a program that would be more robust in terms of the private sector. We've encouraged a level playing field between the state-owned industries and the private sector that would then allow more investment to occur, and also innovative investment to occur. More strength in agriculture would help. And so as we look at the rising debt burden, that's in part because the nominal GDP has gone down after the devaluations. As you calculate, and this is a general problem for countries where if they have their debt denominated in dollars and their currencies weaken, it makes the debt burden and the debt service burden even more costly for the people of the country. So that's an argument for countries, and I made this argument in my positioning speech in Niger 2 weeks ago. It's very important for countries to have a macro framework. That means fiscal and monetary and currency policies that all work to create stability. And if I could leave that message for people as we look at the challenges for the world right now. We have the advanced economies slowing down and not sharing very much in terms of capital with the developing countries. So it's going to be very important, urgent in fact, for the developing countries to adjust their economies to make the best out of the limited resources available from the world. And that goes straight into fiscal discipline, separation of monetary policy so that the central banks are not having to monetize the fiscal deficit, a focus on having policies that allow currency stability so that inflation can be held down. And then, of course, the standard things of trade liberalization and private sector enabling. That means regulatory policies that can help the private sectors of the countries actually grow strongly. So for Egypt, we hope for strength into the future. I think, and the World Bank stands ready to provide support, but it will be very important to have this improvements in the business climate so that growth can strengthen into the future. Thank you.
Thank you. I see Fola de Sao Paulo, I believe. Thank you.
Hi, thank you very much, David. Can you talk about the low projections for not only Latin America, but also for Brazil's growth this year? And also, I'd like to hear your expectations and concerns for Brazil's economy under the new government.
Thank you. I'm going to see if I'll tell everyone we've got 2.9% real growth was 2022 and slowing to 0.8% in 2023. And so people should note Brazil had raised interest rates earlier than other countries. Recall the debate in 2021 and 2022 of whether inflation was going to be transitory, and the major central banks held off on their rate increases. But Brazil was seeing the risk and was raising interest rates then. So what that meant was you're seeing now the delayed reaction to rate hikes, and also to the election uncertainties that came out. So as we look at Brazil, it's got huge potential, clearly. That's a common phrase for Brazil. And part of that is agriculture, the logistics chain, the supply chains that can come from Brazil. One of the opportunities in the world for Brazil is as an agricultural producer. It imports huge amounts of fertilizer from Africa, makes food in an efficient way, and exports to the world in that regard. But the slowdown also indicates concerns that the investors have. This is a global challenge. Investors are not, the investment flows into developing countries have by and large reversed into outflows. And so for Brazil, it's an urgent time to have good economic policies so that there can be faster growth, and that would allow the spending that the government is trying to do for social purposes and for environmental purposes, for climate change purposes. So vital to have a strong focus on faster growth into the future, and I think the good news is the interest rates had already gone up, so that's not such a pressing issue. The more pressing issue is fiscal discipline and the efficiency of the regulatory policy to support growth.
Great. I feel like I've been ignoring Africa. Let's go to the front row here, please. Thank you.
We're not ignoring it.
Microphone, please.
Front row. I want to be clear.
Yes,
The World Bank is very engaged in Africa. Nearly half of our commitments go toward Africa. I was just in Niger and Togo, a very interesting trip into a fragile zone of Africa, and it presents the challenges that we see in fragility around the world. As growth slows, it puts even more pressure on governments that are already facing fragility.
Thank you, Mr. Malpass. I guess this is your last annual spring meetings before Mr. Banga takes over. I was wondering if you could briefly talk about, do you consider your tenure as successful? Do you have any regret? And now on Nigeria, Bola Ahmed Tinubu has just won the Nigerian presidential election. So they are going to have a new government. Can you talk a little bit about the economy of Nigeria? Do you have any recommendation when it comes to subsidies, debt, and the rest, and the situation in sub-Saharan Africa? Thank you.
I can't find Nigeria in there. Where is Nigeria? Oh, here I found it.
Good.
So for Nigeria, the growth was 3.3% in 2022 and 2.8% in 2023 within our forecast. And a high priority for the World Bank is shared prosperity in a sustainable way. And so as we think about Nigeria, there are many changes that are needed in order to allow that process to proceed. While Nigeria has GDP, gross domestic production, a big chunk of that is oil, and it means that a lot of people in Nigeria are facing poverty, and there needs to be a direct focus on that. They also face insecurity across the northern and western regions that are very challenging. And so World Bank is working hard within Nigeria, but also working to try to have an economic system that can be more productive. That means Nigeria has trade protection that blocks the market development. They have a dual exchange rate that is very expensive for the people of Nigeria to maintain that dual exchange rate system. They have high inflation and not enough diversification of the economy to really make sufficient progress. So as your opening question was, what are some of the successes, achievements? The World Bank went through multiple crises, as did countries. The COVID crisis was a shock. It was hard on World Bank staff, but more importantly, it was very hard on clients. And so we worked to move very quickly in order to provide assistance through that period, and we achieved a $150 billion surge. This is way above normal levels and size levels of the World Bank. And then as the latest crisis struck in terms of Russia's invasion of Ukraine and the resulting effects on fertilizer, food shortages, and energy shortages around the world, we put a second surge of financing. So people at the World Bank were working 24/7 in order to have loan operations and grant operations and new investment operations running for people around the world. So I think it was a success, and I'm proud of the results within the World Bank. But I wanted to give you the context for Nigeria, for Egypt, and for other countries where the true success of the World Bank would be if there can be countries where the people are doing well into the future, and that I think is going to take substantial change in the world. So that gets to the regret point that you were asking about. I guess my hope would be that we can break through on this debt roundtable and the debt overhang that's weighing on countries, and also break through on the structural blockages in so many of the big developing countries where they rather than converging, rather than having their growth go up faster than the advanced economies, which would be the goal. As China showed over the decades, a developing country can grow at a 10% rate and catch up with advanced economies in a period of years and decades. India is showing that now with 6%, roughly 6% growth, but with the aspiration of 8% per year growth based on policies that will generate faster growth, more electricity access, clean water access, more investment in agriculture, the things that are needed by the countries. So I hope into the future the world can really work on those techniques in order to create faster growth and a better living standards for people in developing countries. Thanks.
Thank you. We're going to go second row here, the hand up. Thank you, perfect. You've got a mic coming at you.
Okay, great. Hi, David. Thank you for doing this. I want to follow up quickly on the debt roundtable question, but then I have another question too. So on the debt roundtable, you said that there was discussion about burden sharing.
Yeah.
China, until has been insisting that the multilateral development banks also take a haircut and participate. Have they backed off of that during these discussions to some extent? I understand that that there was recognition that that there are other ways for the MDBs to participate. Can you elaborate on that and just talk about that discussion and what exactly will happen in the workshop? And then separately, I wanted to ask you, we've just gone through a period of extreme turmoil in the banking sector, and it does seem like things have calmed down, but I wanted to get your take on it as someone who was formerly in the banking sector and has a little bit of a window onto it, sort of the historical period, whether you think this crisis, whether a crisis has been averted. Thanks.
Yeah, thanks. The debt process has been one of being more inclusive, of bringing in the debtor countries and also the creditor countries. Over the decades, the process had not brought in the important players, the private sector, and so I was very happy at the roundtable yesterday that we had the private sector, we had China and other non-Paris Club creditors present, and also several debtor countries. So this is a new kind of a forum where people that owe and are owed the money are actually talking with one another, with the IMF and World Bank there to try to help get to an end point. China had been asking questions over the years of shouldn't there be debt reduction by the MDBs. That actually doesn't make sense because the MDBs are providing, and the World Bank in particular, highly concessional resources into countries. And so that means there's already an implicit debt reduction going on as the World Bank comes into a situation. The World Bank is providing grants and very long-term, very low interest rate loans for countries. So from a net present value standpoint, that is debt reduction going on an ongoing basis. I think China was more receptive to understanding that. That can be further discussed. But my sense from the current context is we're moving on to new steps. So in that way, that was progress on equal burden sharing. The workshop will be with the IMF and the World Bank, working with the various participants to understand the net present value terms. That means the time value of money. So as I mentioned, you can lower interest rates, or you can lengthen the maturity, or you can reduce the principal value of the debt. So how can you make those comparable with a standard discount rate on the net present value? So these are key technical concepts of how to get to a restructuring. Those will be discussed, and I also expect discussion of arrears, how treatment of arrears, of penalty interest, and of surcharges, all of which become important as the debt restructuring process is dragged out. If the timeline can be accelerated, some of the technical issues can be less burdensome. With regard to the banking sector, I would only observe, well, I'll observe several things. One is that there's been a major shift in the interest rates from a long period of zero to more normal interest rates. And some entities have a maturity mismatch within that. So that means a period of workout to decide what to do with the maturity mismatch. So that hit there was a liquidity crisis for some US banks as the depositors withdrew their money from Silicon Valley Bank. If we look worldwide, there will be some other cases of maturity mismatch, but the more pressing challenge, and it came up in meetings yesterday, is the effect on credit, the provision of credit. In both the advanced economies and in developing countries, we're seeing the availability of credit go down as banking systems examine their balance sheets. And so I think it will be very important for the world to think in terms of how do you have short-term financing going into companies. Short-term financing is the lifeblood of growth. For a company that's trying to add customers, they need to finance the accounts receivable and the inventory that's needed, and the trade finance that's needed in the case that there's imports. And so this is called working capital. IFC can provide it to private sector companies, but the needs are gigantic for the world. And so as the banking systems come under strain, there needs to be redoubled efforts to have capital flow to working capital. That's one reason I've advocated for the central banks, the major central banks, to hold less duration on their balance sheets by the major central banks borrow from the banking systems of their countries and of the world. So the Federal Reserve borrows from US banks and from European banks and Japanese banks, and then puts it into long-term bonds. And some of that capital has to be liberated and allowed to flow into working capital so that there can be relief within the customers of banks. And so that's actually an urgent problem. There needs to be more credit provision from the banking sector, and there was ample discussion yesterday of the reduction in credit going out from banks in the advanced economies and around the world. I was in West Africa two weeks ago, and the regional markets have been slowing down and shutting down there. That comes on the back of the international markets also closing down. So as we think about the impact on developing countries, this is a severe shock in terms of their financing, and I really think it needs urgent address by the advanced economies of what's going to be done in order to allow working capital financing to start flowing again. Thanks.
Thank you. In the middle toward the back, Alex Brummer, if we can get a mic. No, I'm sorry, I've called on someone else. Thank you, though.
President Malpass, just to say, do you think that the World Bank has become too politicized? Both, so your own departure seems to have been, in some respect, an orchestrated departure over climate change and battles in the media over climate change. And secondly, the way the whole debt issue is playing out, that also seems to be very political. So the bank seems to have become a battleground between the US and China, and a battleground over climate change.
I'll answer in a different context. If we think about world history over the last 50 years, and I've been active I joined the U.S. government in 1984. I don't know how long ago that is, but the international financial institutions, the IFIs, so the IMF and the World Bank and the other institutions, have always had to deal with political challenges. That's the nature of the business of the World Bank, is to be engaged in countries that have they have elections, we have shareholders that are contentious, and so I've been privileged to work at the World Bank and be president, and it was 4 very busy years. So it's a good time for me to look to new opportunities, and which I'm doing actively, and for the bank to make a transition. To your specific points, as far as on climate, this is not an easy issue for the world. So I don't know that it was particularly focused on the World Bank or on me. It's a world challenge of the mitigation is expensive, so the costs are high at a time when the world is already facing massive shortages of education and of healthcare, and working to increase those. So that creates a natural balancing that the world is trying to do. I was in the middle of it here at the World Bank. We did a climate change action plan that very successfully brought the world to the recognition that you needed to integrate climate and development. That was a cornerstone of our climate change action plan, and that worked well. I think the world has absorbed that and is adopting that, and that was reflected in the evolution process that we're going through at the bank, where the board of directors and the capitals thought about ways they'd like to make it different, but the full recognition is everyone needs to work harder together to address adaptation. So people in developing countries are faced with the consequences of climate change, but without the resources to really deal with it. So I guess I wanted to put it in the context that this is natural for international financial institutions to have to deal effectively with their shareholders. I'm very pleased with the outcomes. You know, we've achieved a lot at the World Bank in these years, and that was reflected yesterday in the meeting of governors. They were very complimentary of World Bank management, of the staff of the World Bank, and of the achievements of the World Bank. So I'm pleased with the direction, and one of the things I wanted to do was to have a very strong handoff to my successor, and I think that process is going well in addition. So I'm looking forward to my transitioning out, and also to the World Bank doing good work into the future. Thanks.
Right. I think we have time for 1 or 2 more. Afghanistan, you've waited so long, so thank you for being patient. Wait for the microphone, please. Thank you.
Thank you so much.
It should be on. Just keep talking. They'll turn the mic on.
Okay. My name is Nazira Azim Karimi. I'm an Afghan journalist. As you guys know, Afghanistan situation is very critical. Taliban as a power. Just women's situation is so bad. I would like to ask you, what's your assessment about Taliban? Although nobody recognizes them, money go to Afghanistan, like 40 million a week. And the people, this money go under humanitarian assistance, but Afghan people never get that money. I don't know what's going to be your policy for future toward Afghanistan, although women's situation is very bad. Thank you so much.
you.
I
Thank you.
appreciate it.
Yes, it's there's been a really horrible change of direction in Afghanistan that has taken away freedoms of women, and and girls, and that affects our programs. What we did, you know, the evacuation itself came suddenly and was traumatic for World Bank staff, but even more so for Afghan people and all of the assistance workers that were in Afghanistan, and the consequences are still being felt. I was with Chancellor Merkel at the time of the evacuation must have been August of 2021, and it was devastating for Germany, who had been participating in Afghanistan and was facing a very sudden evacuation that had not been prepared for. So now, as the World Bank changed our programs, there was a cessation of our our people came out of Afghanistan. We were able to put them in Islamabad and in Dushanbe, so in Tajikistan and neighboring Pakistan. So they continue, many of them worked hard to continue programs in Afghanistan, but it was undercut by the actions of the Taliban. We work through we are the trustee and work the Afghanistan Reconstruction Trust Fund, ARDF, which has been the donor group which has continued to have some flow of funds into Afghanistan, and we're working hard with donors on their interests in what's the right thing to do in a country that has huge needs, very, very pressing humanitarian needs, and yet a government system that is so difficult to work with. And so that's an evolving relationship that people reassess week by week in terms of, is there anything that can be done to help girls' education? Well, that's difficult. And how can food aid be actually brought into a system where the currency payment systems are not working? So we are heartfelt concern for the people of Afghanistan. Thank you.
Thank you. One last question, and I think as we're moving toward Marrakesh in the fall, let's take a question from Morocco. They're third row back with the glasses, please. Thank you.
Thank you so much. As you know, Morocco has initiated its energy transition a few years ago. I would like to know your assessment about this transition. Thank you very much.
Thank you. And what David was referring to is the annual meetings of the World Bank and IMF will be in Marrakesh in October. I was in Morocco a year ago. The energy transition consists of a big increase in solar panel installation and production of solar panels. Also, the continuation of natural gas as an energy source, which is a reduction in greenhouse gas emissions from the alternative. One of the big concerns going on in the world is the big increase in use of coal within Europe, and the long-term contracts that Europe has taken for natural gas supplies and coal supplies, which leaves shortages within many parts of the developing world. So what countries are doing is accelerating their solar power plant installations, and also trying and working around the world to try to secure some supply of natural gas in order to avoid going to diesel generators. As many of you know, the rise of diesel generators in many countries, which are high carbon intensity energy sources, are rising and problematic in Nigeria, in South Africa, in many of the countries that can afford diesel generators. So one of the things we're trying to do is avoid that outcome for developing countries. It was also discussed at some length yesterday, the challenge of access to electricity. You know, this was one of the fundamental sustainable development goals and there are still 800 million people around the world that don't have access to electricity, and the concern is that number's going up as the grids break down in some of the major electricity producing countries around the developing world, and so that itself is a concern that we're moving into a situation where people who had electricity lose access to electricity, and renewables can supply some of the backup, and it's doing that, and we're working actively in battery storage and in solar panel, scalable solar panel techniques, and Morocco is a very strong participant in that program. Thank you.
Thanks, everybody, very much. Thank you, Mr. Malpass.
I'm getting steps ready in case.
Yes. Where is Julie? And this is coming.
I think it's the wrong.
Oh, no, it's not this one. Where did it go? We had a beautiful picture, and
There we go.
And I skillfully lost it. So here it is. Okay, let's roll.
All right, good morning, everyone, and welcome to the Managing Director, Kristalina Georgieva's press briefing on the global policy agenda for the 2023 spring meetings. We will begin with the Managing Director's opening remarks before we take your questions. Kristalina, the floor is yours.
Julie, welcome to your role, and good morning to all members of the press. I would like to start by thanking you for the hugely important work you do, often in very difficult circumstances. Far too many of your colleagues are persecuted. It is a tragedy for them, for their families, but it is also a threat to the very foundation of a vibrant society. Here at the IMF, you're always welcome, even when you bring your sharpest pens. And you're most welcome at these spring meetings. They are taking place at a time of complex challenges. The world economy has proven remarkably resilient to the multiple shocks of the last 3 years, but it is yet to overcome the combination of weak growth and sticky inflation. As you have seen in our latest World Economic Outlook, we project global growth to slow down to 2.8% in 2023 and remain weak at around 3% over the next 5 years. This is the weakest medium-term forecast in decades. Underlying inflation remains stubbornly high. Geopolitical factors affect also the economy, and economic fragmentation has implications for trade and capital flows, and downside risks have increased. Fighting inflation and safeguarding financial stability have become more complex with the recent banking sector pressures. And I want to stress that an issue that we all have to be very mindful of is that low-income countries are particularly vulnerable given high level of debts. And their per capita income growth lacks those better off. That means it is harder and harder for them to catch up. So in this environment, we have our global policy agenda.
Changed again?
I changed again. Oh, well, you know it. We have our global policy agenda, and we concentrate on the path to restore both short-term and medium-term prospects for sustainable and inclusive growth. Let me highlight 3 priorities. First, restoring price stability and safeguarding financial stability as prerequisites for return to robust growth. So long as financial pressures remain limited, we expect central banks to stay the course in the fight against inflation, holding a tight stance to prevent a de-anchoring of inflation expectations. Further efforts to reduce budget deficits, critical to support the fight against inflation and reduce debt, but this is not an easy task. We still have to care about the most vulnerable segments of our societies. And central banks should address financial stability risks where they emerge, working closely with regulators and supervisors. Key is to monitor risks that may be hiding in the shadows in banks and non-bank financial institutions or in sectors such as commercial real estate. At this moment in time for the world economy, vigilance is absolutely paramount. Second, rebuilding the foundation to sustain future prosperity by acting now to advance structural transformations and counter fragmentation. Think of steps to accelerate the digital revolution, improve the business environment, boost human capital and inclusion. And think of the green energy transformation. We estimate $1 trillion a year needed just for renewable energy, an investment that can translate into growth and jobs. We also need to step up international cooperation to reduce the harm from fragmentation. You're well familiar with our analysis. It shows that the long-term costs of trade fragmentation alone could be as high as 7% of global GDP. If we add technological decoupling, some countries could lose up to 12% of GDP. Fragmentation of capital flows, including foreign direct investments, would be another hit to global growth. Third, solidarity with the most vulnerable countries. I take pride that here at the IMF, since the start of the pandemic, we have provided nearly $300 billion in new financing for 96 countries. This is more than half of our membership. Just in the 6 months since our annual meetings in October, our board has approved 23 new borrowing arrangements. Nearly half of our financial commitments in the past 3 years have been done through our precautionary facilities, like the one we approved for Morocco last week. Much better to put a buffer and prevent a crisis than to have to respond to a crisis when it occurs. We have also stepped up support for vulnerable middle-income countries, including through a temporary increase of the amount members can borrow from the IMF. Recently, we have provided financing to countries such as Sri Lanka and Ukraine. And we have used our new tools to meet new challenges. Our food shock window is helping countries cope with the economic consequences of Russia's war in Ukraine, while the Resilience and Sustainability Trust is focused on long-term challenges such as climate change. We have 5 countries already benefiting from the RST. We have 44 expressing interest in it. Yet, for the most vulnerable members of our global family, additional support from the international community is essential. Us being here this week, we have to be mindful of our duties to them, and I want to make a double plea on their behalf. Help them resolve crushing debt burdens and help ensure that the IMF can continue to support them going forward. On the first, we now have the Global Sovereign Debt Roundtable. It is making tangible progress, co-chaired by the World Bank, IMF, and India as G20 chair. We have brought together public and private creditors as well as borrowers, first time all of them sitting around the table, to accelerate restructuring cases, including those under the G20 common framework, but also those that are not covered by the framework and are pressing. We met yesterday. I was very encouraged by the positive outcomes. First, we agreed to improve information sharing on macroeconomic projections and debt sustainability assessments at an early stage of the debt restructuring process. Second, we reached a common understanding on the role that MDBs can play, notably through the provision of positive net flows of concessional finance. Third, we now have a clear work stream, including a workshop in the next weeks on how to assess and enforce compatibility of treatment. Main purpose, accelerate restructuring. And you know, I always say, proof of the pudding is in the eating. So let's see how well we do Zambia, Ghana, Ethiopia, Sri Lanka. On the second part of our plea, key players met yesterday to discuss urgent funding gaps in our poverty reduction and growth trust. Our concessional financing has increased more than fourfold since the onset of COVID. Coming into these meetings, we have been calling for $4.7 billion in additional loan resources and $1.6 billion in additional subsidy resources to maintain interest-free support. And I'm very encouraged that some of our economically stronger members are already stepping up. Just in the past few days, 5 countries, Ireland, Japan, Portugal, Saudi Arabia, and the UK, have all come forward with substantial new pledges or contributions. And we call on all members to work this year to successfully complete the review of quotas, the building blocks of the IMF's financial structures, so we can continue to strongly fulfill our mission. We have a lot more to do this week. We have a lot more to do after the week is over. I just want to finish by saying we have overcome enormous challenges these last years. We can and we must do it again. Thank you very much.
Thank you very much, Kristalina. Now we'll open for your questions. Let's go with Colby. Please go ahead, Colby.
We can and we must do it again. Thank you very much.
Thank you very much, Kristalina. Now we'll open for your questions. Let's go with Colby. Please go ahead, Colby. Oh, I think we have a microphone coming.
Thank you. Colby Smith with the Financial Times. So while the growth forecasts were not materially different than the last update, the fund seemed to paint a pretty bleak picture about the outlook and the risks confronting the economy, both in the near and medium term. And yet Treasury Secretary Janet Yellen has urged people not to overdo the negativism about the global economy. Mm-hmm. So what accounts for the IMF's more downbeat view here, and what are you seeing that Secretary Yellen isn't?
I think we are seeing the same picture. It is just a very complex picture. So let me answer it the following way. I agree with Secretary Yellen that we have feared recession. And at this point of time, our projections are for walking on this narrow path that avoids hard landing. But 2.8% global growth is not enough to bring opportunities to businesses and people around the world. And most worrisome is the projection for weak growth over a longer period of time. Why is that projection? Because productivity has been lagging. And let me remind us, this is what I talked about in 2019 in October when I first sat in front of you. Synchronized slowdown, low productivity, low growth, social unrest. If we are to overcome that trend of meager growth that holds us back and holds the aspirations of people back, we have to concentrate on action. It need not be this way. And where we see action, one, structural reforms. It is hard but necessary. Second, finding a pathway to improve security of supplies. We know we have to do it, but do it without significantly harming trade and financial flows. And third, prevent what I really fear can be a very dangerous divergence in economic fortunes of better off countries and that are falling apart. So I think the question is, you read the numbers. I don't think that anybody would say, oh, these are fabulous numbers. Look at this. Oh, my goodness, we are going to grow 3% a year over the next 5 years. But they are also not horrible. We are not in recession. So the question of interpretation, I think, is the one that I would put to you in my book. We are not in a great place. We see risks increasing. But we also have now a track record over the last years to be remarkable resilient.
Great. Let's go with Eric, please, Eric Martin.
Thank you very much, Managing Director. I'd like to ask you about the Sovereign Debt Roundtable yesterday and the advances made there. It seems like there was an advance in terms of more concessional financing coming from IDA, but we understand that there were also elements and objectives still to be met in terms of timeline and actually speeding the process. We had heard that there was a proposal for potentially a 3-month deadline for countries to provide financing assurances, or for the IMF to potentially look at using its lending into arrears policy more actively, more liberally. I was wondering if you might be able to speak a little bit about the timeline challenges and what some of the proposals are there for the next steps in terms of timeline and actually speeding the restructuring process.
Thank you very much, Eric. I want to start by reflecting on the participants' own take yesterday. The public sector creditors, traditional new, the private sector creditors, and also the borrowing, the debtor countries. And their reflection is that this is a breakthrough in a way of finally bringing everybody that has to be at the table together and defining areas where we can reach consensus now and areas of future work. I spoke about the areas of consensus now. Actually, I want to stress that, to my mind, the fact that we now have a clear work stream on compatibility of treatment is essential. Unless we have an understanding of compatibility of treatment, we cannot achieve timeliness. We will be stuck in arguing whether this is fair or not. where we also have agreed yesterday we have to work much more concentrated on is this issue of timeline. We have not reached an agreement yesterday, but that was not we have not aimed to reach that agreement. Where we concluded is that we have to identify the principles for how timelines are being set. We have to accept that there will be case-by-case decision, but this case-by-case decision needs to be within defined timeline, defined parameters. And that would be number one task for us on the agenda for the next round of our engagements. On lending into arrears. This is a question that many of you are asking, and I want to give you the best, the most accurate answer I can. It is an option today. We have a policy of lending into arrears. We actually applied this policy in the case of Suriname. What does it mean? It means that if any creditor is yet to come with financial assurances, we are not going to hold the country hostage to this creditor. However, there are two issues. The first one is when we lend into arrears, for the country, we are actually kicking the can down the road. We are not resolving fully the debt to a sustainable level. They still have this one or more creditors that are holding, and their debt issue has to be addressed. Secondly, there is always a risk that the country might opt, after having received a support from the fund, to pay this holdout creditor, creating potentially significant moral hazard and significant difficulties to implement a fund program. It is an option that we will use when we believe there is no way to do the best one, to be in plan A. And plan A is restructure the debt and give the country breathing space to grow. And again, I want to be very clear on that. We would not hesitate to use our policy if and when we think that there is absolutely no chance to reach the desired outcome, which is restructure the debt of the country.
Okay. Let's turn now to Argentina. Paola.
Where is Paola?
Paola's right here in the front.
Good morning. In the last review of the program, just 2 weeks ago, the IMF said that policy implementation has become less reliable, and now Argentina is going to be in a very contentious presidential election. Are you confident the government will do what it takes to sustain the program, in particular to meet the fiscal targets? Thank you.
Let me just recognize that in the second half of last year, the Argentine authorities have worked on bringing prudent management and meeting the targets of the program. And as you know, on March 31st, our executive board completed the fourth review of the program because of what the country has done. We also know that Argentina was hit by severe drought that has undermined the performance of the economy and is harming people in the country significantly. That has complicated the job of policy makers. We have looked into the implications of this shock. We have partially accommodated those in the modification of the net international reserve accumulation target. but we recognize that we have a commitment from the government to continue to fine-tune policies in light of the conditions they find themselves into. And we will follow carefully on how successful they are. It is always about implementation, and it will continue to be about implementation in these very challenging circumstances.
Great, very good. Let's, do we have a question on Africa? Maybe we turn to Africa? Yes, okay, let's take a question on Africa. I have Julien.
Ghana, okay. Go Ghana.
Let's go with Ghana. Let's go with Ghana, please. Let's go with Ghana, please.
Very well. Thank you so much. MD, it appears that your outfit is putting out a strong case for Ghana, which is well appreciated. However, the 32 million people in Ghana right now are awaiting that announcement by your board. Please, where are we?
Let me say that we have been in constant contact with the authorities in Ghana. We have worked very hard and very swiftly to have the program for Ghana, 3 billion support program for Ghana in place. We have been urging Ghana's creditors to act swiftly. My appreciation for also the proactive role of the Minister of Finance of Ghana in reaching out to creditors. We are expecting that next week there will be discussions among creditors, and I can tell you that I use every opportunity myself to urge them to act swiftly. Let's remember that Ghana, for a long time, has done really well to tap markets to finance its growth path. It has been like all innocent bystanders hit by COVID, hit by the war in Ukraine, and it has complicated domestically the ability to finance the budget. So a country that has long track record of sound macroeconomic management ought to be supported to return to markets. So our program is a bridge for Ghana, and to tell you the truth, I'm actually quite optimistic. I think Ghana is going to move. The creditors are going to move, and we are going to move swiftly. So I guess the short answer to you is stay tuned and stay positive.
Okay, let's maybe go to this side of the room. Lady in the green in the very first row. I think right here, in the green, right here, first row.
Thank you so much. My name is Tao Xu from the China Central Television. I have two questions. The first about your trip to China. As we know, you had visited China last month. So what impressed you most in this trip? Another is about China's economy. And what are your hopes and expectations for China's economy in the next 5 years? Thank you.
Thank you very much for this question. I had a very fruitful visit to China. It gave me an opportunity to meet with Premier Li Qiang, as well as other leaders, and discuss the prospects for the world economy, for China's economy, as well as the importance China has in terms of supporting low-income countries. We had discussed here the topic of debt. That was one of the issues that I was very encouraged to hear from the Chinese leadership, a commitment to constructively engage and to do its part for the countries that are pressed to restructure their debt. We have been, you asked me what impressed me the most. What impressed me was the Premier Li Qiang's very clear message on China continuing to reopen and pursue in pursuit of reforms that can strengthen the prospects for China's growth. I have seen how different it is when the economy reopens. And on that basis, to answer your second question, we see China this year rebounding quite strongly. Our projection is for 5.2% growth. When I would say that in China, the Chinese leadership would say, well, that's more than we are projecting. As you know, the domestic projection is for about 5%. We have been pleased to see this rebound of China, not only for China, of course for China, but also because of China's role in the world economy. China this year is going to contribute about 1/3 of global growth. We calculated that 1% more growth in China translates into 0.3% more growth for the economies that are connected to China. This being said, there are significant challenges, and we discussed those with the Chinese leadership. Still, the issue of how to handle real estate actions are being taken, but there may be more necessary. And also how to redirect the Chinese economy more towards domestic consumption. What policies can work in that regard?
Okay, very good. While we're on Asia, let's maybe have a question on India. Gentleman right here, second row, in the middle.
Thank you, Madam Managing Director. This is Lalit Jha from PTI, Press Trust of India. India, as you know, as G20 president, has taken a lead in collectively addressing most of the global economic challenges. How do you see those efforts by India? And secondly, Madam Managing Director, President Biden has nominated Indian-American Ajay Banga as the World Bank President. How do you see this appointment as, and what are the key issues that you would like to work with Mr. Banga as the World Bank President?
Thank you for these questions. India is doing an excellent job in focusing the work of the G20 on what matters the most. What matters the most is to move through very complex policy challenges, comparing notes, and coming up with the right policy actions. What matters the most is to re-energize global growth. And here India brings its fantastic track record on digitalization and how digitalization can re-energize the economy. And also on the very serious question of debt. I want to praise the finance minister for her very active engagement in making the Global Sovereign Debt Roundtable a success, as well as in India's participation in debt restructuring in cases where India plays a role. For example, the very important role India plays in the case of Sri Lanka. I very much look forward to continue to be working with the Indian presidency. To your second question, I have known Ajay for quite some time. I think very highly of his leadership skills, but above all, of the commitment to inclusion and opportunities for all that he has demonstrated throughout his life. We have been together on many occasions talking about inclusion, gender, And I would always hear not only substantively somebody who is really very smart, but also a beating heart. And this is what the leadership of the World Bank is all about. Vision, but also compassion.
Okay. Maybe we can take. why don't we shift now to? We'll shift now to Middle East. We'll take Pakistan, please.
You need to give the floor to Andrea. She's not going to forgive me ever if she's not given a question. Andrea, it's going to come. Where are we?
Let's start with maybe Pakistan and then Egypt.
Pakistan.
About Afghanistan as a critical situation, please. As a woman, I need to ask.
Thank you. This is Ali Khizr from Pakistan. And I really appreciate the efforts of the IMF on the debt restructuring. And we talked about the few countries where the debt restructuring exercise is happening. Pakistan could be the next one in this. And it's a very big country. It's the 5th largest country in terms of population. And it's also affected by the climate. And the debt of Pakistan, unlike Ghana and Sri Lanka, is not very much market-based. It's a bilateral debt and the multilateral debt. And then the climate impact is there. And the inflation is really closing to the hyperinflation area, especially in food. And there's a challenge of the food security in coming years. So how we can learn from the experiences of Ghana, Sri Lanka, and other countries to not let that happen, what happened in these countries in the past 1 to 3 years to Pakistan.
Thank you.
I have had the opportunity to actually see what climate shock means for the people in Pakistan in 2011, and I know that the current drought is the current flood is much more dramatic than the one that I saw, that I witnessed. No question, Pakistan will continue to be on the front line of the climate crisis. And that means the country ought to think about building more resilience of communities, think about the future of agriculture in a more climate sustainable manner. But to your question, we have been working very hard with the authorities in Pakistan within the context of our current program to make sure that Pakistan has the policy framework that makes it possible to avoid what you're talking about, to get to a point when the debt of Pakistan may become unsustainable. We are not there yet, and it is better not to get there. We are currently also discussing with those who support Pakistan in terms of providing financial assurances so we can complete the program. My hope is that with the goodwill of everyone, with the implementation of what has been already agreed by the Pakistani authorities, we can complete our current program successfully.
Very good. We'll go to Egypt here in the front, and then to Andrea. Egypt right here, front row. Front row, please raise your hand. Yes.
Thank you, Julie. Good morning, Mrs. Georgieva. I have 2 quick questions. As announced under the EFF program approved for Egypt in last December, the first review of the 3 billion loan deal was planned to be conducted on 15th of March, which paves the way for Egypt to receive the second tranche of the loan. So could you brief us on the updates on that? My second question is on debt crisis and inflation threat that place greater burdens on the developing countries. How the IMF does step up its efforts to back these countries, particularly with the huge financing gap these countries are experiencing. Thank you.
Egypt, like so many of our members has experienced the extraordinary pressures that come from the shocks of the last years. And in the case of Egypt, very high dependency on imports of grain from the area of the war had played a particularly severe role. We have agreed on a sound program that has three critical elements. One, exchange rate liberalization. Two, increasing the opportunity for private sector to deliver jobs and growth in Egypt, expanding the role of the private sector. And three, moderate the long-term investment projects that are indeed very important and very good for Egypt. But in the current tight environment, they could undermine macroeconomic stability with the speed that was originally designed under different circumstances. We are now preparing to carry out the review. The teams are working, and I'm confident that we would have a good outcome. I want to say that we have seen in Egypt a deeper understanding of how complex not only the domestic environment is, but also the regional and global environment it is. On the question of debt, I actually talked about that quite some time. You say, what can the IMF do? What we can and we must do, and we do, is to recognize that the lending landscape has changed dramatically, but the debt resolution mechanism has not. What we have seen over the last years is the role of non-traditional creditors has increased significantly. The role of private finance has increased significantly, and yet the only well-tuned mechanism for debt resolution was the Paris Club. So if you have a small fraction of the debt covered and a big part of it not covered, that obviously is not a healthy way to deal with a growing debt problem. We take it upon us to support a more inclusive and effective debt resolution process. We have, as you remember, President Malpass and myself urged the creation of the common framework. The G20 common framework is helping, but it is not yet a place, neither it is created to be a place where principles, policies, processes can be defined. And this is our huge responsibility to our membership. Now, we cannot command the creditors, but if we create a fair atmosphere for discussion, as we have done now, then the path to resolution of problems is clearer. And of course, we finance. Let me be very clear on this point. IMF programs anchor debt resolution. And this is why it is so important that we have PRGT capabilities, because most of the severe debt problems are in low-income countries. Not only, we know Sri Lanka, we know Suriname, they are middle-income countries with debt problems, but most are in low-income countries. And I can tell you that yesterday gave me a great sense of hope when we called on our better-off members to ask them to please step up, because if the IMF doesn't have the financial capacity to contribute to debt resolution, how can we ask the others to do their part?
Very good. We're coming to the end, so we have one more question. Andrea will have the last question.
Thank you so much. I wanted to ask you about fragmentation in the global economy. There's been a lot of discussion about friendshoring. These are initiatives that are underway here in the United States with partner countries. Yesterday, the G7 issued a statement that talked a lot about supply chains and about building bridges with low-income and middle-income countries to expand those supply chains. It sounds a lot like fragmentation. I mean, it sounds a lot like the world is splitting into camps, and you've warned about that. Can you just say something about the G7 initiative and whether you are concerned about that and what the implications will be? Thanks.
Thank you, Andrea. What we have learned from COVID and then the war is that security of supplies and the reliable functioning of global supply chains is taking a new higher priority seat in economic discussions and decision making. And I regrettably have to recognize there is a reason for that. No more we can take peace for granted. Russia invading Ukraine is not only a tragedy for the Ukrainian people. It is a tragedy for the global community because it sends a message that defense expenditures have to go up, the peace dividend is gone, and that more reliance on, you call it friendship, I mean, whatever we call it, more reliability that has geopolitical dimension, not just economic dimension, is going to be sought. So, and then, of course, we also have the impact of globalization that didn't benefit everyone. We haven't been focused enough on those who were left out or behind from globalization. So there are reasons why what we see is happening. The question is, can we be more determined to enhance security of supplies, but not push the world that far that we are into a second Cold War? I believe it is possible, and actually I thought that the discussion around let's see how we can engage developing countries, how we can think about more vibrant division of labor globally, this is a good discussion. I am among those who know what are the consequences of a Cold War. It is loss of talent and contribution to the world. I don't want to see that repeated, and I think it is possible to avoid going there. We can have some costs. Remember our analysis, Andrea. It says trade fragmentation can cost us between 0.2% and 7%. That's a long way from here to there. So can we rationally accept there would be some cost, there would be some fragmentation, but keep this cost low? How can we do it? Well, there are two things. One, we have the institutions like the IMF that bring everybody around the same table. It is a place where we can build more common understanding and trust. Two, we have policymakers that ultimately need to defend the interests of their citizens. Well, if we fail to be more rational, then people everywhere would be worse off. Middle class in rich countries would pay a price as well. So a bit more cool-headedness in that process would take us a long way.
Very good.
And that was the end of our press conference, ladies and gentlemen.
This does conclude.
Yeah, thank you.
Yes.
Yeah.
This does conclude the press conference on the global policy agenda. The transcript will be available on imf.org. And a few important reminders, because I know there's still a lot of questions. First, the global debate seminar will take place today at 2 o'clock in the HQ1 atrium, and the MD will join a distinguished panel to discuss pressing topics shaping the global economy. You will have more opportunities to ask your questions. Tomorrow we will begin our regional press briefings. Actually, they begin today and they continue tomorrow. Check the schedule to attend the regional press briefing that is of interest to you. And tomorrow we will have the IMFC press briefing with the Managing Director and IMFC Chair, Nadia Calvino. Thank you very much and have a wonderful day.
So we have a second bite of the apple tomorrow. Thank you very much, everybody.
סורגים בצבע כסף, לימדת אותי